everyone. Thank you all for joining in on Zoom today for our real estate panel. Hope everyone is staying safe at home. I'm Stella Hahn. I'm a software engineer at a firm, and I also lead the CMU TIBA alumni group. So CMU TIBA's mission is to build a strong CMU community within the Bay Area where our alumni are connected with the right people, resources, and opportunities that they need to thrive and succeed. We host recurring speaker series for different industries, similar to the one that we're doing now. And we've also done a lot of other events such as happy hours, hikes, and also workshops for current and aspiring founders. And given the current situation, we know we can't get everyone together physically, but please do join our online CMU TIBA Slack community. We now have over 630 people on the Slack, so it's a great way for everyone to stay informed and interact with each other. I'd also like to take the time to thank our CMU TIBA board members. We are an independent org, and we work entirely on a voluntary basis, so this event wouldn't have been possible without their dedication to drive the community forward. So thank you all. And before we begin, please mute yourselves if you haven't already. We also have a live questions aggregator that we'll be using for Q&A. So feel free to leave any questions that you have for our speakers on the questions aggregator or upvote any existing questions. You should see the link to the questions aggregator in the chat of this Zoom, and I'll send it again so that it's at the bottom for everyone to see. Okay, so without further ado, I'd like to introduce our 3 CMU alumni who have all been incredible leaders in the real estate space. We have with us today Alex Klarfeld, who's the co-founder of Divvy Homes, Natasha Sachdeva, the head of business operations at Roofstock, and Jon Chu, who leads core machine learning at Opendoor. So Alex, would you like to kick things off and introduce yourself, your background in Divvy Homes?
Hey, sure thing. Thanks for the introduction. So I'm Alex. I graduated at CMU in 2013 with the electrical engineering degree. And yeah, I was one of the co-founders of Divvy Homes. And the whole purpose of our mission is we're trying to help families transition from renting into owning. My role at Divvy, I built a lot of the original software. And then kind of as the company and the engineering team grew, I now run the pre-offers team at Divvy, which is basically all the products that our customers or our agents experience up to when they submit an offer on a home.
Hey guys, I'm Natasha Sachdeva. Thanks again for the introduction, Stella. So I double majored in chemical engineering and biomedical engineering at Carnegie Mellon and graduated in 2008. Since then, I have had a few different career paths that we'll go into later on. But currently I'm at Roofstock, which is a marketplace for single family rentals. So basically we have investors who put their investment properties with tenant in place on our site. We do all the due diligence, analysis, valuations, pictures, whatnot, try and be advisors. And then we have other investors buy off of our site. So trying to help facilitate that process and making, tenant occupied single family rentals available to the overall community. So I was a director of business development there for 2.5 years, helped build out that team, facilitate some of our larger institutional transactions, and I'm now head of business operations. So really digging into our KPIs, finding rooms, for us to become more efficient, more optimized, and have been doing that for the last couple of months.
And hi guys, so I'm Jon Chu, and thank you Stella for inviting me to this. I'm CMU class of 2011 and studied computer science in SES. So currently I'm at Opendoor and I'm running the core machine learning team that manages, maintains, and also keeps all of our models at Opendoor up to date, both on the resale and acquisition side. And prior to Opendoor, actually prior to being an EM at Opendoor, I also used to run the product team for growth at Opendoor back a 1.5 years ago. And my history in work-wise, I started out in distributed systems at Palantir Technologies right out of school. And from there, I've started companies, I've gone over into product, and I've gone back into engineering. So I've been all around.
Awesome. Alex, so we're all curious on your story of how Divvy Homes got started and how the company has evolved and pivoted throughout the years.
Yeah, sure thing. Maybe I'll dig a little into what we do. So we take this kind of Divvy Homes, we take this interesting model where we find renters or people who are currently renting. They apply on our platform, and we essentially give them a budget. They get approved. And then they'll go home shopping like a normal home shopper would. The only difference is once they pick out the home, Divvy actually buys it, and then they rent from us for 3 years. And the idea is they pay this monthly payment that's kind of a combination of like a rent payment and then this equity payment. And the goal is at the end of 3 years, that equity payment accumulates into about 10% of the home's value, which we hope that they turn into a down payment to get like a mortgage. That's kind of the company in a nutshell. We started at, it's called HVF Labs, which is Max Levchin's startup studio. So the way that HVF worked, there was about 4 of us on the team. And Max brought in an entrepreneur in residence, who was Brian Ma at the time. And Brian had this vague idea of like something between renting and owning, wasn't totally sure. And then our team, our goal at HVF was essentially to try a bunch of different ideas around that central thesis. So if you worked at a firm during this time, you probably remember when I tried to pitch you on splitting a vacation home with like 10 friends. We went through a bunch of iterations, a bunch of different ideas until we landed on Divvy. So yeah, like I said, it all centered around the original hypothesis was is there something between renting and owning? So our first thought was like, can you get 2 roommates to co-own a house together? And that idea was pretty cool, but it was pretty difficult to get 2 people to like agree on what home to buy together and that they're going to live together for the next like 30 years or so. So it was a good idea. It just didn't get the traction that we wanted. So then we moved on to a similar concept, but it's like, could you get 10 people to truly split a vacation homes, sort of like a modern day timeshare? And that was a little bit better of an idea, a little bit more legs. People were willing to try it out, but no one was really banging down our door to get the product. So finally, the idea was we took the first idea, which was, could you get 2 roommates to own a home together? But instead of having a roommate, we were the other partner in the home. And once we started playing with that idea, it was just like a clear winner. People were banging down our door trying to get a hold of us. We didn't get back to them in time. And it was just kind of night and day when figuring out demand between these different products.
And Natasha, you've transitioned from biomedical engineering at CMU to consulting at iBanking and now doing business operations at Roofstock. So how did you facilitate this fast-paced movement between different types of careers?
Yeah, so I would say every transition was different. I am kind of the epitome of trying to figure out what I want to do when I grow up, and every experience has really taught me, different things of what I like and I don't like. That's been helpful. But in terms of transition, going from engineering to consulting, consulting allowed me to really hone in on those project management and client management skills. So I look to, management mentors to help hone in on those and take on varying projects to continue to enhance those skills. And then going from investment banking to, real estate, to be frank, when I joined Roofstock, I had no real estate experience. So investment banking, I focus in on technology mergers and acquisitions, which gives you a good crash course in various industries because you have to be advisors for different companies. So that allowed me to build that experience on being able to dig into a variety of industries in a short amount of time. And so I leveraged that and went into real estate, and same thing, did my diligence, some things that helped me in transitioning into real estate and kind of gaining that industry knowledge was, I started listening to a lot of podcasts. So examples were Bigger Pockets. I know Roofstock, we just launched our own podcast. That was very helpful. Reading as many articles and as much as I could. I also looked into, going into a variety of conferences, single family rental conferences, networking, really picking people's brains on, their expertise in the industry and gaining as much knowledge as I could from them. So I think of, combination of all those things it did help quite a bit when I was trying to aggregate quite a bit of knowledge in a short amount of time.
Gotcha. Yeah, that's definitely super helpful for those that are trying to transition into something very different from what they're doing now. And John, you mentioned that you've co-founded Koality right after graduating CMU, and that was later acquired by Docker. So what was that journey like?
Yeah. So it actually wasn't directly after CMU. So I had about close to 2 years at Palantir in the middle, and it there's a lot of highs and lows in starting a company. And I think the biggest high here is actually when the company got started, right? We we had a personal pain point with build systems inside of Palantir. Somehow or another, from some Palantir party that Peter Thiel threw, we ended up getting coffee at Samovar in San Francisco with Peter. He, at the end of the conversation, we were like complaining about some internal problems inside of Palantir, and he just offered us $500K to go start a company. So it was very unexpected in some regards. And that's how the whole journey got kicked off. So that's like a high point. And then there's different points in time that are more fun or less fun, right? So like a lot of the big high points are building products, going and talking to customers and understanding what it is and what their pain points are that they actually have, and then sitting with them and doing a little bit of solutions architecture, solutions engineering, and being in their office and installing the product for them and getting your first few customers. Some of the low points are when you figure out like, oh, so your market isn't actually as large as you thought it was, and you have to pivot a little bit and figure out how to expand into a larger market that you can actually survive in. Or actually another low point, we, during our acquisition process, actually, we were talking to 4 or 5 companies, and we actually thought we were going to go with one of the FANG companies because everything was pretty close to being done. And then the FANG company dropped out at the last second, right? So we actually got really lucky. Docker had been evaluating using our product for a while internally, and they thought this was a great match. So it ended up being a perfect match for us to go to Docker. But I think all in all, in terms of starting a company, the one thing that was most valuable in the entire journey, or the lessons that you pick up, was really from a software engineering standpoint, you tend to be a little bit further from the user, right? And you tend to know the systems very well, but you don't understand the business as well as you could. And that's just because you don't get the exposure. In a large company too, if you're a product manager, you sometimes also don't get that exposure. Like you understand how a large company operates and how the mechanics work together, and maybe how the financial balance sheet works or how marketing works, but you don't actually understand how things tick and why things have to be the way they are. And when you start a startup, and Alex definitely has this experience right now, it's kind of like either you figure it out and it works, or you're kind of screwed, right? So it forces you to actually pick up those lessons. It forces you to really understand what the core value of the company you're delivering actually is. And those lessons are applicable in any job, in any company that you go over time. It applies to a small company of 10 people, and you can also apply those lessons to a business unit of 50 people, right?
Yep, that makes a lot of sense. So I now want to jump into a little bit more industry specific questions. So Roofstock, Divvy Homes, and Opendoor, they're all dealing with incredibly big transactions. So how does the company build and establish trust with consumers so that they're willing to let a platform own the entire process of home buying, selling, and investing?
Yeah, so at least at Roofstock, we take pride in transparency, customer service, facilitating, and really establishing our credibility with our users and our consumers. So we have a huge customer success team or customer service team who are there to just continue to handhold you throughout the transaction, similar to transaction coordinators. And then ourselves, you know, continuing to have that communication and ensuring that people are over communicated versus under communicated. You know, with buying a home or selling a home, it's a big transaction. You know, there are a lot of pain points to it. So we do take pride in leveraging our technology and our people to establish that transparency and ensuring people know, you know, what's going on throughout you know, the whole process versus leaving them in the dark. And I think, you know, taking pride in that has definitely helped us, you know, build the customer base we have at, you know, today.
And with these incredibly large transactions, it always helps to understand that for many individuals, this is probably the largest transaction that they're going to make in their life. So this is the most important transaction financially for them that they can do. And if you put yourself in their shoes, it's like a pretty scary proposition, right? So for us, being over communicative, getting all contact info up front and making sure that they know what's going on every step of the way, removing a lot of the thrash. Like you want to make sure your communications are clear and that you're not getting conflicting information from different teams and telling your customer the wrong thing at certain points in time, and building out dashboards that are very, very clear and let the customer know the expectations ahead of time and have them follow that process are very helpful in building that trust. And also, like, I think for all of our companies too, the last point is the more transactions you do, the more and more customers are willing to trust you, right? So back when we started, and even when I joined in like 2017, trust was a very large problem. We had a lot of customers actually be like, all right, so I asked for an offer from Opendoor. I like, cool, you offered me $280,000 for my house. But how do I know that after you offer me $280,000, you're not gonna like try to lowball me on the inspection, or you're gonna try to pull that offer and renegotiate with me or screw me some way or another, right? And it took a lot of effort to actually explain to these customers who we were, why we were doing what we were doing, and what our mission statement actually was. Over the years, as our transaction volumes have increased, these days, I think people know what we do and they can trust us more because they can talk to their friends or talk to people in their community and see that others have had the Opendoor experience and they know what they can expect.
Yeah, similar echoes with us is, huge personal life decision. And we're also in this unique case where most of our customers are first-time home buyers. So we've really ingrained in our culture to be able to handhold our customers through the entire journey of home buying process. And we know them on a personal level, they know us on a personal level. And it's pretty cool actually, because oftentimes a lot of our lunch table conversation will be like, oh, hey, did you hear like Johnny's starting his buyback process, which means that he's transitioning into home ownership. And pretty much everyone at the table, regardless of their like engineering or sales, or whatever, they know exactly who Johnny is and they know how hard he's worked. So it's kind of cool because we know our customers and they know us, and we try to just maintain that culture even as we're growing.
That's incredible that you're able to form like such close relationships with the people that the platform is serving. So how do you build moat or defensibility as you continue to innovate in the industry, and how do you continue to sustain competitive advantage?
Yeah, so for Opendoor, we have 3 pillars essentially that we stand on for this competitive advantage. The first one, and perhaps the most obvious one, is pricing and data. So for housing, you can view Opendoor in some regards as a market maker for housing. And if we can price houses the best, so like, if you humor me for a second, this is extreme oversimplification, but if your company can price houses the best, then you can offer prices that are the best that match customers. And every single house you acquire, you make money on. Every single house you don't acquire, you'll lose money on. And your competitors will end up buying all the houses they lose money on, and then it becomes a battle of attrition, right? So that's one strategy that we actually do employ. And given we were first to market and also have the largest volume, one way that we can increase and help our moat on pricing is with data. So every single customer that comes to Opendoor goes through our seller flow and inputs unique data into Opendoor itself. And that's data that no other company and nobody else on the planet has. So over time, that set builds up and feeds back into our models, allowing us to do better pricing. The second point is unique supply. So what you'll see is in some of our markets, especially the ones we've been in for a longer period of time, we've begun to capture a large percentage of the monthly transactions of real estate that actually happen in the market. So if you actually end up having a unique supply of houses in your inventory, then you can start controlling who gets to see those houses and where they're actually shown, which like there's a number at some point, right? Maybe at 1% of houses on the market, people aren't really incentivized to look at opendoor.com. At 5%, who knows? But if it's 20% or 30%, say you can't see 20% of houses unless you come to Opendoor, then it becomes a lot more interesting, right? And in some of these markets, we're starting to reach those higher numbers. So unique supply is another place where we sustain a competitive advantage. And the last part is just having better customer service. We're a company that's roots are based in technology, and that allows us to scale our operations teams much, much better than a lot of other competitors in the space, which allows us to give more personalization and focus to each individual customer that comes through Opendoor.
Yeah, and we have a lot of like overlap in terms of like the operations with Opendoor, as probably John can attest. Buying home is really complicated, and the unique thing about us is we actually build for every single aspect of the home buying process. So we're the application, we're the underwriters, we're the agents, the inspectors, and even the property managers. So we just own the entire home buying process, which is just a massive undertaking. And a lot of companies just kind of split up and take little bits and pieces of it. But it gives us a pretty distinct advantage to just own the relationship with the customer from the beginning until the end. And oftentimes a lot of people will ask us why is it, what's stopping someone from just going out and building like another Divvy? And honestly, you could, like, if you have enough money and you have enough people, you can absolutely build something like Divvy. Blackstone essentially did this with Invitation Homes. They just bought up huge swatches of homes and then shoved people inside of them. But if you really want to build a business that scales without exploding headcount, growing like an insanely large team, you really just need to dig deep into the operational complexities of purchasing a home and figure out how to either streamline them or fully automate it with software. So we definitely have the proprietary pricing algorithms, but what we're really trying to build is this like ultra complicated, well-oiled home buying machine. And that's like the epitome of our technical mode.
Yeah, and Alex, your customer relationship is actually much, much longer than ours, right? Because you also have property management and also rental.
Yeah, it's 3 years essentially from application to end.
Yeah, I mean, I'll echo sort of what John and Alex said. For us, it's also our technology and our data. One thing that's unique for Roofstock and is that we're kind of the first mover in tenant occupied single family rentals and creating that marketplace. And so we do have a lot of moving parts and a lot of analysis and data that we can provide to our buyers and sellers, and we're trying to continue to enhance that technology and provide those unique data points, everything from neighborhood scores or our unique valuation algorithm, or just the analysis of what your returns will be if you own a tenant occupied home in Detroit for 5 years, and you have vacancy to take into account and capital expenditures and home price appreciation. So there's a lot of great data there. I would also touch upon, and that's something that has helped us quite a bit, is overarching our feedback loop. So we do take into account, a lot of customers' feedback. I think some of the customer feedback has resulted in some of our most innovative ideas that we have, as well as our employee feedback. We have a very flat culture, so a lot of the times people come up with some very innovative ideas on how to how to streamline something or make something more seamless, and that's allowed us to really continue to enhance our our marketplace, our website, and our customer relationship. So definitely helpful to continue to have that type of culture as well.
Gotcha. Makes a lot of sense. And kind of going along what you were saying earlier, Alex, about how a company would need a lot of upfront cash to be able to kind of purchase these real estate properties, like what you were saying with Blackstone. So if you were a startup, how would you be able to test product market fit before raising capital?
Yeah, it's definitely interesting. So I can tell you how we did it. And you can actually get surprisingly far without officially raising a dime. So what we did was we found a bunch of family and friends who were just generally interested in real estate investing. And surprisingly, especially in the Bay Area, those people are not hard to come by. Everyone's kind of interested in real estate investing. So we essentially determined their seriousness, people who were willing to sign on the dotted line if we provided an investment for them. And then we started finding customers to match them with. So the original customers of Divvy, the early ones, we were essentially hitting up Craigslist, trying to test our product, running like very little Facebook ads here and there. And then like essentially got really close to the finish line where we had a customer and then we had a family and friend who was willing to buy their house to essentially like simulate the Divvy transaction. And you can kind of feel the fit from both sides. Like the investor is really excited to have this really awesome transaction where the returns are pretty solid. And the customer is really excited for this new product where they get to kind of build into home ownership. It just kind of took some iteration to get to that point, but that was the model that we set up.
Gotcha. And what about for Roofstock and Opendoor? Like, you do still need large amounts of capital just to run kind of the fundamental parts of the business. And especially now, maybe there is kind of a potential economic recession. So what are some of the challenges there, and what are your companies doing to kind of offset that?
Yeah, I mean, it's interesting to see because a couple of years ago, it seemed like capital was, it was easy for people to raise capital. And now you see some of those companies are, shutting doors, and it has to do with everything from, product strategy, relevancy, or execution. And so at Roofstock, we take pride in, what is our vision? Our vision is to make real estate available from everyone on Main Street to Wall Street. So how do we need to execute and sell that story and ensure that we are executing to our, and prove that to our investors? So I think that's helpful. And we also ensuring that we have the right people to execute and continue to build on that track record. I think that's been helpful. But having that vision and ensuring that we continue to prove that we are working towards that vision has helped us quite a bit.
And for Opendoor, at least at the start of the company, we kind of did, in some regards, we did the Invitation Homes thing, where Keith Rabois was one of the founders. So he basically just brought the cash. So there was really not much of a problem in terms of trying to suss out the market and figure out what the product was without having cash to spend on houses. But you're right, Stella, that the business to run does require large amounts of capital. And I'm not an expert in capital markets, but generally we have large debt lines that are handled not by your traditional VCs, but by your major banks, right? And those debt lines have been in place before the current thrash in the markets. So they're still in place. Nothing has actually changed on those lines. But the way it does impact our business is that we do have to be very cognizant of what the debt covenants or triggers are on those lines. So they basically give limits to us on how long we can hold houses on the books, for example, or where we can use certain debt lines. So it adds a whole level of complexity to the business itself. Like, for example, one of our lines, maybe debt line A can buy houses in Houston, but debt line B is not allowed to buy houses in Houston, right? So it adds a whole extra level of complexity to the business that we have to manage, and also impacts our unit economics pretty significantly. So we have a holding cost in every house. And like part of that's HOA, part of that's taxes, but part of that is also the debt on the lines itself. So optimizing those lines of debt and figuring out how to lower the cost of capital is a major part of the business itself, and actually becomes a pretty significant factor in your unit economics. Speaking of a slowing market in the current thrash though, it's like one of the ironies of tech companies. Whenever you are not contribution margin positive in your business, what you'll find is a slowing market actually increases your run rate because you're not losing money on every transaction.
Yeah, that actually makes a lot of sense. That definitely didn't occur to me before. So another thing that I think is really complicated for real estate is kind of like the legal side of things, especially when we're talking about like different contracts with home ownership, like property management, etc. So what unique challenges has legal and compliance created for your companies? And has that created a lot of overhead in terms of exploring new products?
Yeah, so for Opendoor, it definitely has. Like I have tons of stories about this, but I think the one that's most easily understood, there's a law called Respo in real estate, And it's essentially to prevent kickbacks between different parties that are involved in the transaction. And given each transaction has a lot of parties involved, there's a lot of different people that have to work around this law. But it makes a lot of different things you'd want to ship complex. For example, if you want one side of your business, like we have in-house title and escrow and we have in-house mortgage. If you want that side of your business to work together with the buying and selling side of the business, your language has to be very, very correct and not cross certain legal lines. Otherwise, you could get slapped with a giant lawsuit, right, by the government. And one example of here is referrals. So we were trying to, when I was running growth product for Opendoor, we were trying to figure out a way to actually run a referral process so that if you referred someone to Opendoor, we could actually give you an Opendoor credit towards your house, right? And we went back and forth with legal probably for 6 months about this because Respo basically made giving referral credits essentially illegal. The law states that you cannot give any type of benefit that is worth monetary value to anyone that refers someone to your business unless you're a registered agent. So given like the people that we wanted to help refer their friends to Opendoor were not registered agents, we weren't able to even buy them a cup of coffee, right? This is challenging because the reality is that in real estate, it's a very salt of the earth, operations heavy business. So we're competing with agents that are actually backroom dealing and basically taking people out to dinner, doing things on the ground that the government's never going to be able to actually catch, but we ourselves are not able to do it because our operation is large enough. So the referrals initiative actually ended up dying because we couldn't figure out a way to make that work. In that process, what I also learned is that lawyers are lawyers. They're not product thinkers. And even though product lawyers are willing to work with you, it does take some time for them to adjust. Their mindset is very much, how do we protect the business and make sure that we're never crossing the line? It's not the mindset of how do we figure out what the loopholes are and how do we get around this to actually make it work? So that really falls on the product managers, the operations guys, or the engineers to figure out how to actually work with legal. And a lot of times it's frustrating because sometimes what it feels like is like, it's a black box. You ask them a question like, can I do X? And they say yes or no. And they'll give you some explanation, but it's not really deep enough for you to understand how you could work around it. The other two examples I have, title and escrow is fast and easy. There's certain products you can't do in title and escrow because legally an escrow agent has to handle the transaction, right? So if you want to automate away the escrow agents, you can make them more efficient, more effective, but you can't actually replace them. And for mortgage, mortgage is like a very heavily regulated industry. So it's funny, like our mortgage team probably took 12 months to actually spin up correctly. And the first attempt, I think he's actually the first employee at Opendoor. He spun up the original mortgage units, ran the whole thing off of Airtable, and was about to close his first 10 mortgage transactions when our head of legal got into some of his documents in Google Docs and shut the whole thing down because if she found out that the entire operation was illegal. And this was like back in the early days of Opendoor, right? But that was essentially 6 months burned because one, an individual was trying to be scrappy and move really fast, which is generally what you hear about in startup world. And just like, it wasn't that he purposefully disregarded the legal aspects. It's that he didn't even know what he was doing was crossing a bunch of lines that would have gotten us in trouble and fined like 10,000 ways, right? And we just got lucky that our head of legal happened to come across some documents and was like, guys, this is actually not okay. We're going to be in trouble if we do this. But when we pulled back and worked on the mortgage product, it actually took, like I said, 12 months to stand up something that was fully compliant. So I guess the moral of the story there is, yeah, legal and compliance does significantly slow you down, and it gives more tax to language and more tax to thought that operations and product have to think through. And it definitely in some cases makes it so that things that are obvious to others in other markets, not real estate, cannot be applied to real estate just because there are no laws, there are no loopholes or boundaries you can cross within the laws, right?
Mm-hmm. Yeah, that makes a lot of sense. But hopefully that also is able to create some sort of barrier to entry for other people who are trying to get into the market. At least they have to kind of figure out all of these things. And for Alex, do you think it is essential to have a lawyer as part of the founding team?
Yeah, I don't think so. I think it's like if the lawyer also brings other great qualities to the team, but I don't think it's a must-have in my opinion. That being said, when we first started Divvy, we did a lot of upfront research into the legalities. Spoke with a ton of lawyers. They weren't necessarily full-time, but we did spend a lot of time with lawyers and reading up on our own. And at our core, we're a landlord. That's our relationship with our tenant, and then we have this subcontract with them that kind of helps them build equity in the home. And the rule of thumb I've learned over time is like people are pretty reasonable, and as long as you're acting in good faith, a lot of the legal hiccups that you might expect kind of disappear. It's not really a huge deal.
Gotcha. Okay, that makes sense. And what are some of the biggest problems that each of you are facing today in your roles at the company?
Yeah, it's an interesting question because basically the most top of mind thing right now for me is algorithmic pricing. The reason being, you basically just had a public market change where the S&P is down like 30%, right? Everyone's staying home. Business is basically closed. And we still have a number of houses in our inventory. We have to figure out what we're going to do with those, right? We have people asking for offers. We have to figure out what to do with those. And historically, so the way models work, or at least our models work, it's trained on historic transactions that have occurred that are listed on the MLS, and then some data that Opendoor picks up in other places. What you're going to see is essentially, I don't want to like make wild predictions, but anywhere from a week to multiple months of a very reduced real estate market and transaction volume. And then out the other end, you're essentially going to have a very different supply and demand curve than you had before going into this market. So the most top of mind thing for me right now is how do I change all of my systems and all of my teams to adapt to this? And what do we do in terms of risk to account for that today in our current acquisitions and our inventory? So perhaps like not what you were quite expecting, but a little bit more of like a hedge fund style response than a tech company style response. And the second most important thing that's top of mind for me is just thinking about all of our people and making sure that everyone is okay in a good mental state and handling the current environment well and being there for each other.
Yeah, those are yeah, that makes a lot of sense. Those are good answers. For me, the kind of the core is like being compassionate when building software. Our goal is to provide like some sort of fiscal education to our customers. Financial literacy, real estate education is just ultra complicated. And we actually really want our customers to make the right decisions. I actually care about this so much that all of our engineering candidates who interview with us, one of the interview problems is essentially building a product that explains the complicated parts of Divvy to a customer and how they think about overcoming obstacles, especially when you're building for someone that may not have the same sort of knowledge base that you do. And it's super important to us, super important to me, but it's super necessary if you want to be successful.
Yeah, so it definitely interesting times around here, and I was not expecting this, but what we're dealing with currently is, we have inventory on our site. We were in the midst of multiple transactions and transitioning from ownership of, one property that was one investor owned to another, but now, they aren't able to get their documents notarized. And there's a lot of stop to business in what we're dealing with. So greed markets are, we're seeing a huge transition, and it is going to be a bit of a lull. We're already seeing, an impact in our traction on our site, and doing deep dives in our homes and our phone calls. So this has definitely been a huge impact. As an aside, with what we're dealing with, before, these, the coronavirus, and before that, one common, big problem that I'm personally, helping out with at Roofstock, and from an operational point, is that, real estate in general is a very cumbersome process with, a lot of parties involved, and a lot of steps involved, and a lot of systems involved. So one thing that we are struggling with is just how to continue to make that process more seamless, as we transition from one property manager to another property manager, or from, one owner to another, and then also how many systems that hold our data, and how can those systems talk to each other and ensure that we're integrated in every step of the way. I think one thing as a startup in general you deal with is that you do try and be scrappy, and you try and bootstrap things as much as possible, and it results in a lot of siloed systems that don't integrate with one another, and can create issues with respect to scalability. So as we continue to grow, I mean, I've been at Roofstock when we were 50 people. We're now at 230, 240, and we acquired a property management company about a year and a half ago. But as we've continued to grow, that integration and scalability mindset is essential as we try and expand our product offerings and our customer base.
And for this next question, I think we all kind of touched upon it a little bit, but what parts of the real estate industry do we think is irreplaceable by technology and will still need human power and human insight to accomplish?
Yeah, my opinion is a little bit controversial just because I know like the Redfins of the world might disagree, but I don't think that agents or agent-like people are going to be replaced by technology anytime soon. We've kind of touched about it in previous questions. There's just something so personal to buying a home that I was meeting with one of our agents actually in Dallas for coffee. And she was telling me about how she still keeps in touch with all her customers. And she actually was at a barbecue for them. And it's like the relationship is just so tangible and so real. And it really helps our business. And I just don't think there's any code that anyone can write that can replace that.
Yeah, I mean, I completely agree. Real estate in general is a very high touch industry, which requires a lot of communication. So I don't think that is replaceable in any way, especially with respect to advising and negotiations, and then just overall communication. I think that will continue to be part of the process. Agreed, as much as other players in the industry want to disagree. I know that's something that we take pride in at Roofstock, and is quite resource intensive on our end, but it allows for a much more positive customer experience versus, hey, go through our marketplace and leverage our technology from end to end. Especially for our first time home buyers, there is a lot of hand holding that's necessary to help them through the process and make a positive experience for both the buyer and the seller.
I think that's actually one where I'm going to have to disagree with you guys, with both of you, because I do agree it's very handholdy today, but I don't think it has to be, right? Like part of that is restrictions and difficulty just interfacing with the different entities like your tax assessor or your local county or your HOA that you have to do. In the long term, I think a lot of that's going to go away, right? It's just like how everybody eventually moves to the internet. Your local HOA is going to eventually move off of fax machines and get back onto email, or not back on, but get onto email for the first time, right? Maybe that'll take 10 years, maybe that'll take 20 years, but that'll happen at some point. And as far as the agent goes, I do think there is going to be some kind of human touch that's involved, at least in the medium to long term. I don't know if that human touch is going to be in the form of an agent, though. It's a really, and this is partially, I'm obviously biased because this is partially the proposition that Opendoor is founded on, but 6% to sell your house is a pretty steep number. So that agent really has to deliver a lot of value for that 6%. And unless they're delivering 6% worth of value, I just don't see them being around long term. Or maybe they are, but their prices are compressed very heavily. And you got to think, right? If what it is grabbing coffee, giving advice here or there, and basically holding your hand through a transaction process, if you're looking at 6% on the average house, what is that? That's like $18,000. The average house is like $250K, right? That's $18,000 you're paying someone to hold your hand through a process, through signing paperwork, and then talking you through and giving some very crude advice on a transaction. And maybe I do see this in our data that some of the less tech savvy sellers and less tech savvy buyers do need that because they don't actually understand some of the newer technology. But Zillow and Redfin have actually democratized at least real estate research and data pretty well. And even talking to our agent partners, most of their sellers and most of their buyers go in knowing a number and having a price in mind, and they're not able to sway them very far from that number. They might move the price up and down, maybe 5K, but it's never going to be massive drops. Now, I would also say, like, I would agree that agents will never disappear from the high-end property market. So that would be unique and luxury houses. Just because in those different markets, the supply curve and the demand curve are just so low. You're really looking at like, this person just has to occur at this point in time while this person's also selling that house. They just have to match perfectly. And to do that, you're gonna need a broker to actually be there and understand everyone looking at buying and everyone looking at selling at the same time, so you can cross that one transaction when it happens. So I agree with you guys in that regard, that I think agents are always gonna be there for certain markets in the real estate market. But for the vast majority, maybe like the 25 to 50% of houses that are just cookie cutter transactions, over time, more and more human in the loop aspects will probably be removed. The one part I do think will never get removed on real estate is just the physical components, right? It's going to be really hard to have software and robots basically handle your negotiations or handle your like data collection, handling your rehab, etc., or your property management.
So there's a big international market for potential buyers. Has that brought unique opportunities and challenges for your company?
Yeah, so at Roofstock, this is something that we are potentially starting to look into more. It is interesting to see that there are international investors that do want to tap into the US market, and what makes Roofstock a bit more of a unique opportunity for them is that, you know, it's a property that they can acquire, it's tenant occupied, and, you know, we help facilitate the property management, the lending, and all that. So it's a bit, you know, hands off with that respect. I will say there are some logistical challenges that go into onboarding international buyers. Everything from, you know, taxes to take into account, you know, or you know, how to input their credit card numbers. But there are some logistical challenges that we are looking into, some legalities as well. But agreed, that is a huge market, and at least at Roofstock, we do see this massive opportunity for us to tap into that. Given how easy it is for them to invest their money and be able to, you know, be a bit hands off with the property management in place.
For us at Opendoor, it's less of a focus, especially on the retail side. So every hack week, I think there's some team that comes up with like, how do we market to international buyers? Or there's like a bunch of individuals, someone knows a bunch of rich individuals in China that actually wants to go buy US houses. How do we actually go get them to actually acquire Opendoor homes? And at the end of the day, what we never actually focus on it, because there's so much demand inside of the US that is the customer that we look at serving first. And the other part too is the international retail buyers, at least, they tend to have specific agents that are very geared towards that use case. And those agents know how to buy a house and work with us. So there's nothing we really need to do to facilitate that. They've already found the Opendoor houses, and like we list on MLS, they're already going to find those houses and they're already going to know how to buy them and how to work inside of our process. The one unique aspect is that we do have a institutional platform so unlike Natasha, where like there's a bunch of legal aspects involved when you're actually raising money from international individuals, our institutional platform is allowing international entities to buy our houses, where that process is actually not any different from allowing a US entity to buy our houses. So these entities, all we have to do is we have to onboard them into our institutional platform. They'll get all of our houses through, they call them tapes, but they're essentially downloadable CSVs or Excel spreadsheets that they process on their side, and they'll come back with bids on all of our houses. And those transactions will happen just like normal. Title and escrow will handle it and facilitate the whole thing. And those have been lucrative for us because those international buyers do have deep pockets and can purchase houses from us in large chunks.
Gotcha, that makes a lot of sense. So kind of moving on into a little bit more, I guess we can all kind of reminisce about our CMU time. So how has your time at CMU influenced your career?
Yeah, so it's, I think like the most impactful part is the foundational knowledge. So I still work very closely with software and in software. All of the stuff I learned at CMU related to distributed systems in theory, I still have to apply every day, or at least be able to understand it well enough. So when someone smarter than me actually comes at me with things, I can actually go whiteboard with them and understand and give useful insight. And also from CMU, I think Carnegie Mellon did a very good job of teaching us how to learn and how to take an impossible thing to learn and then force yourself to learn it in the course of a week so that you could handle the problem set or the next test. And the other thing that CMU did for me was it put me at Palantir, which I don't think I would have ended up at that company without Carnegie Mellon. And Palantir's ended up being the most valuable network that I have in the Valley. So it's been a very helpful kind of like career booster or a set of friends that I can rely on. And from Koality, my startup, I got my friends and co-founders, both from CMU and Palantir. And knowing Eric, who's over here, he's the CEO at Opendoor, but I ended up at Opendoor because Eric's an old investor of mine and also a friend of mine. And I met him because of Palantir. So that's coming from CMU. But the other thing I've actually found, this is like maybe the least important of them, but I don't know if any of you guys have had Danny Slater as a professor, but Danny Slater and his splay trees actually make very good conversation topic with a lot of different individuals that don't all go to CMU. So that's actually one of the most useful icebreakers that I've had.
Yeah, for me, it's kind of similar to what John was saying, but maybe the more cynical part of it. But CMU kind of taught me how to fail and then get back on the horse and then fail again and then just keep failing continuously, but just like not stop. And I just think CMU breeds the most persistent people on the planet, and I think they do it very intentionally. And I don't think I would have gotten that experience anywhere else. And I love bringing CMU people onto the team because of this like shared drama of whatever, where I just know people are going to work through everything, just straight up run through walls to get things done.
Yeah, I mean, I would echo what John and Alex said. I would say also just stepping out of your comfort zone. I mean, as you can see, you know, with my career, I've done a few transitions, but that hesitation wasn't that much there as it might have been had I not gone through that CMU experience, because I knew, again, what it meant to fail, you know, and just deal with it and just keep moving and be thrown into situations where you have no idea what the heck you're doing, but you'll figure it out somehow. So that was, I would say, definitely changing, definitely established my career. And I think another thing that's been helpful is the network. So as I was trying to figure out my exit from investment banking, I tapped into the CMU network quite a bit to, you know, really learn about various startups, various industries, various roles. And that's how I established, you know, going into business development at Roofstock and working in fintech, is because I had done so many conversations and really learned, you know, what the business functions were like and what the day-to-day was like, which I found to be quite helpful. And then the last thing I would say is, I don't know if anyone had R.F. Culberson as their professor. I actually took, you know, three or four entrepreneurship classes with him, and he's still, you know, a mentor of mine to this day. And I've bounced ideas off of him. You know, he wrote my recommendation letter for University of Chicago for when I got my MBA. Like, he's been a great sounding board. So being able to have that has really, again, kind of put me to where I am today. It's definitely very invaluable. The network, the mentors, and the experiences, it helps establish this foundation that really carries you out throughout your career.
Mm-hmm. And I'm glad we're all here together and this community is growing and we're all here to support each other. So for our last question for the panel, what is some advice for aspiring first-time founders and leaders in the audience trying to start or do something in the real estate space?
Yeah, for us, I'm going to speak from our experience in iterating through a bunch of problems. I really push anyone who's thinking about starting a company in this space to just think about the world outside of what you or your immediate friends and neighbors might experience, and make sure that what you're trying to solve is actually an acute problem. We ran into this when we were trying to do vacation homes. It was like a cool idea, not really an acute problem, and very limited to like our observable space of friends who wanted to go to Tahoe. And then since we transitioned into this model, we just realized there's just so many more problems out there to solve. So much of the rest of the world outside of the Bay Area that has these real estate related issues. So I just encourage everyone to start looking there.
Yeah, I mean, completely agree. I think we've definitely scratched the surface of, real estate technology. I think it's a very up and coming industry, especially how antiquated real estate processes are. So I think there's a huge opportunity. I would say, there are a lot of, varying steps that you can look into, or various steps into the real estate transaction you can look into. Everything from, title to closing. There's a lot of room for opportunity there. So I would say really dig in, get into the weeds, get through the process yourself, go through the process yourself, find rooms for improvement. And also, again, I can't stress this enough, tap into your network, really, go through your ideas with other people that are in the industry and, what their thoughts are and how applicable and relevant it is. I just had someone a couple of days ago, they're looking to start a tenant screening criteria company to help property managers go through tenant screening in a more seamless manner. And, we just had a 30-minute powwow session where we looked through, the technology they've built so far and, what are some issues that we're currently dealing with, and they're leveraging that input. So tap into your network. There's a huge one, especially with CMU. I mean, myself, feel free to reach out to myself via LinkedIn or email or whatever it needs to be. Always happy to help because I think, there's a huge opportunity. So definitely dig into the weeds and take advantage.
And I think echoing both what Alex and Natasha have said, your network is going to be very helpful. And also, I think you should definitely look, as Alex said, look outside the Bay Area, because something that, or like, actually to be quite frank, it's outside the Bay Area, New York, Seattle, the places where most CMU students tend to end up. And the reason really is those are extraordinarily unique real estate markets, and actually extraordinarily unique places that, if you're looking to serve Americans, are not where the majority of Americans actually are and do not represent the typical customer that you actually will have. So understanding your true customer and going outside of those markets will be very valuable. And perhaps like this is more of advice for just starting a company in general. It's not directly applicable, or it's not specific to real estate, but you need to have a really, really good understanding of your market and all the players, how they work together, why they work together the way they do, why things are the way they are. And you have to have a really good understanding of your customer, right? So make sure you understand that deeply. And like, to be frank, there's a huge opportunity cost to starting a company. It's a giant amount of risk. There's parts of it that are a grind and not a lot of fun, right? And there's always that Google job or Facebook job that you could go to instead. So there is a huge opportunity cost. Make sure you understand that market well and make sure that you're actually passionate about it whenever you go do it. Because what's going to suck is if you go find a market, it turns out to be maybe a decent market, maybe not a great one, but you find out you just hate it, right? And you just hate whatever market you're in. You can easily burn a year to 2 years of your life in a startup and not realize, or maybe just ignore the fact that you're just not enjoying yourself. So make sure whatever market you go into, you actually have a passion for it and you actually want to be the person, or you actually want to see a solution in the world for that particular problem. And I think the last part about just starting a company and running it in general is just that it can be a painful and rough process, but you should always just remember that your employees and your people are taking a risk with you, and they're actually taking the largest risk perhaps and taking a bet on you. Your investors are not going to look out for them. You're like, the press is not going to look out for them. The only person or people that they have is you. So if you do start a company, just make sure that you turn an eye for your employees and make sure you're looking out for them.
Yep, that makes a lot of sense. That was super insightful. Thank you all for sharing your experiences. I want to move on to Q&A now. And again, we're getting our questions from our live Q&A aggregator. The link I've posted in the Zoom chat. So I'm just going to go to that right now. I think our top most voted question right now is, have the real estate platforms you worked for detected leading indicators or slowdowns in any markets?
Well, I mean, I guess I don't know how much I can actually say because most of it is proprietary data, but yes, we have detected slowdowns in markets.
Same.
Okay.
I'll second that one too.
And the second one is buying real estate as an investment completely at odds with making housing affordable?
Yeah, I can take this one because it directly speaks to our mission. So we're actively trying to bridge this homeownership gap. The homeownership has been boxed out by so many people. Like, so many people don't have access to it. And like, at least what we think is it doesn't have to be completely at odds. Divvy as a company, we make our money on rent, but we also make money when the customer actually buys the home back. So that's essentially our end goal is we really try to align our own business incentives with the consumers to make housing more affordable, to bring people more into homeownership. Homeownership is the biggest wealth builder in the United States. And you do need a little bit of boost to get out of the renting loop, as we think, but it does not have to be at odds.
I can speak to this from an investment, a real estate as an investment point of view. So again, Roofstock, we're tenant occupied single family rentals, and a product that we're looking to, or that we have launched as of last year, was called Roofstock One, and it's fractionalizing, tenant occupied rentals. So basically what happens is Roofstock buys a single family rental, there's a tenant in it, and we own 50% of it. And for example, it's $100,000. We own, 50% of it, and the remaining $50,000 we distribute that in 5 different shares, so $10,000 each. So again, providing additional liquidity in the market, making it more affordable that someone can just, buy one share in a property in Indiana and one property in Detroit, or one property in Dallas, whatever it may be. But I think that is a leading factor and a trend of where real estate is going, is just how do you, first of all, make it more affordable and also democratize it so people have the ability to invest and then, with what Alex is saying, potentially own as well.
And I think I'll just add a small statement to that, but Opendoor I don't think has a stance on this because we are a liquidity provider. So whether or not it's an investment or affordable, we are still going to provide liquidity. Personally, I do have a question in my head that's around, if you look at real estate as a good investment and it always has to beat inflation, then essentially that means, almost definitionally, that means housing prices just continue to go up past affordability, right? So that's not something in my head that I can reconcile very easily. Although I do agree that there are models like Roofstock and Divvy that make housing more palatable for individuals of lower income or the individuals that can't afford the full house itself. But I personally don't see an immediate or obvious solution to the entirety of the house being a good investment, yet still being affordable.
Okay, next one is, what's the biggest misconception either about your specific business or real estate in general?
I can take the first stab at this one, but for us at Opendoor, especially on the buying side, the number one biggest misconception that customers have is that buyer's agents are free, and that you'll be surprised how often that makes it so that buyers end up using a buyer's agent when they don't need to, or when they've already made all the decisions, and add an extra 3% cost into the transaction. So the way the real estate market tends to work is the seller's agent takes 6%. And when he or she sells it to a buyer, that buyer's agent gets paid a co-broke by the seller's agent. So if the seller's agent charges 6% and ends up paying a 2.5% or 3% co-broke, they're basically splitting the upfront 6% costs 50-50, right? So if you actually come without a buyer's agent to a home and you figured out you want to buy this house, this is your dream house, and you don't use a buyer's agent, that's actually a lot of cash that you could be saving. And a lot of buyers actually come to Opendoor. They've determined the house they want, they determined the price they want, and they've actually negotiated with some of our resale agents. They have a price in place, and then they pull in a buyer's agent at the last second just to handle the last 10 seconds of the process, right? It's not 10 seconds, right? But it's like signing paperwork and whatnot. And they really didn't have to do that, and they just cost themselves an extra 3%. And for a 300K house, it's a good chunk of cash. It's like $9,000.
Anyone else want to jump in, or we can move on to the next question too?
I can take a stab at it. Ours is a little unique. We operate a lot of times in parallel with a lot of these rent-to-own companies. And rent-to-own companies in general kind of have a bad reputation as being scammy and predatory and whatnot. And there's good reason for that. A lot of these companies will essentially find people, put them in the home, and charge them a premium on the rent with the dream that they'll potentially be able to own it. They're essentially selling the consumer an option to say, hey, you rent from me for 5 years and I'll sell you this home at a discount in 5 years or something like that. And these companies are usually owned by hedge fund and PE type people who the consumer is never going to win, and usually does not win against these companies. I think Home Partners America has like a 25% buyback rate in their business. And what we're really trying to do is to show people that it doesn't have to be this way. We really want you to buy the home at the end of the program. And we've pretty much done everything we can to align our business model with you buying back the home. So if I could wave a wand, that would be my misconception, is stop using the traditional rent-to-own models and come check out Divvy Homes.
I would say, at least with that Roofstock, I mean, the biggest misconception is that how hard it is to invest in tenant-occupied homes. One thing that we continuously deal with is, there are properties on our site that they become vacant. People have, anxiety on how to, continue to ensure that there's cash flow from day one. And I think that's the biggest issue, is that, there's a lot of work that they would have to do on their end to continue to invest. So I would say that, you have your property management, leverage, us as well as resources, but understand that there are a lot of moving parts to the point where, if you want to invest in single family rentals, there's a lot of resources out there that can help, and a lot of property managers and lenders and all who can really continue to step you through the process along with ourselves and ensure that you have, a seamless investment versus, trying to put a tenant in yourself, getting a call at 2 a.m. on a plumbing work order. I mean, you don't need to do that. That's why you have property managers in place. And we want to ensure that, especially our first time investors, that they know that buying an investment property, that it's not as difficult as it seems.
Gotcha. And for the next one, the nature of the real estate business involves agents who need to be in close proximity with clients trying to buy homes, which is not possible right now. So how are your companies thinking about handling these circumstances?
I can start with this one. So at Roofstock, I would say 90 to 95% of our buyers live 1,000 miles or greater from the property that they buy. And so I would say that is, you don't have to be, we don't have agents on the ground. We don't have any sort of resources actually really on the ground. What we have is, technology, people, customer service, transaction coordinators, people in place, and as well as our data in place to help with all the evaluation analysis you need to help facilitate the transaction and make you feel comfortable that you can buy a property sight unseen. So I do agree that the local agent model is, at least for us, it's not relevant. It's fizzling away. So at Roofstock, we take pride in that we provide enough information, transparency, pictures, and also our own credibility, that it allows people to be, for example, in the Bay Area, and be able to invest in a property in Dallas or Detroit.
Yeah, Stella, if you wouldn't mind repeating the question, you cut out there for me for a second.
The question was, given the current situation where you can't have close proximity with clients trying to buy homes, what are your businesses doing to kind of or work around that?
Yeah, so for us, if you're trying to buy a house, we do have self-serve all-day open houses. So you basically go to the Opendoor house, you can unlock it yourself and take a look around. And if there's no one else in the house, right, you're not going to be close to anybody else. So from there, all communications is done through the app, which means, or phone call, which means that you don't actually need to have physical contact. I would say that there is one problematic aspect of the current market environment, which is some county offices are actually physically closed. So you cannot buy a house in some of those counties, even if you wanted to, and both parties had agreed to. So that's been a bit of a wrench in that particular process. And the other thing we've done too, because in terms of home buying, we make offers sight unseen, but for us, we need to inspect the house to make sure things are fine before we actually purchase them. Given the current economic environment, we've actually just instituted a company-wide, as of today, a company-wide stoppage of handing offers to consumers until we know more about the market itself. So we are not buying any houses for at least the short term.
Okay, I think we have time for probably one last question. Are there any interesting upcoming policy or regulation changes that are important to know of or that will greatly impact your business? Oh,
I hope not.
The
Not that I know.
one that's up and coming, it's all dependent by state, but there's certain tax laws in, like, let's say Philadelphia, where you have to pay taxes on every single, what do you call it? Every time a home changes hands, you have to pay taxes on that. And all these like little state and regional policies or tax issues like directly affects our business model. So I guess in short, there isn't one overwhelming policy like federally that would affect us, but there are a ton of these like little state and district policies that directly affect the buying of homes.
I guess in a slightly tangential note, but related, one thing that we are watching pretty closely, I forget the exact amount, but the real estate, whatever the real estate government board is currently in a lawsuit with Zillow over essentially Respo violations, but the definition of a referral. So we're watching that pretty closely to see how that goes for Zillow. I forget the exact number too, but it was like a massive, it was like 75 million or something, some large amount that they're being sued for. And we're watching that closely to see how that case ends up and then how we have to change our product to match or adjust.
gotcha. Well, that's a wrap. Thank you, Alex, John, and Natasha for joining us today for the panel. And thank you everyone for joining us on Zoom for the event. We're gonna be sending out this short survey shortly after, since this is kind of our first time doing everything online. So we wanna get some feedback on how everything went. So stay tuned for that, and also stay tuned for our upcoming events. Thank you everyone again for joining us.
Thanks,
Thanks.
guys.
Thanks for organizing this, guys.